Let's get across the market open now. Jessica Amir joining us from Moomoo. Jess, great to catch up with you on this Tuesday. Of course, we're a week out from the US election. It's all about the Trump trade at the moment, it would seem.
Yeah, I think so. So some people do have Trump fever. The polls are suggesting that Trump could win, but regardless, markets are started. They're trading week, the biggest earnings week of the cycle this week. Red hot. We're seeing running of the bulls 1 week away from the US election. But absolutely, the main theme taking hold is that investors are really aggressively pricing in a potential Trump victory, whether some people like it or not. So some traders are really, getting their hands on anything and everything that could potentially benefit from a Trump victory. So I guess that's why we saw Trump media shares up 22% overnight. The biggest corporate holder of Bitcoin, MicroStrategy, up about 9%, Bitcoin up 3%, but the world's biggest Bitcoin ETF, IBIT, up 4.4%, Coinbase up over 5%. But look, gold is also doing its thing as well. It's continuing to move on up in the vicinity of record all-time highs. But all in all, forget about the Trump trade aside. The narrative is supportive of the equity market to continue to move and search for new highs. We've got bond yields. They were behaving badly a little while ago. Now bond yields are behaving good. They're fallen from the 3-month highs. The US dollar is also stepping lower as well, and that is supporting equities. So looking for perhaps some more momentum, not in oil stocks though, because the oil price is down 5%.
Yeah, oil taking a big tumble overnight, I guess, on easing fears about potential strikes on Iranian facilities, but looking as though that won't eventuate. Jess, also on Wall Street, I mean, clearly a focus this week on earnings results. We're getting some really big ones from megacap tech.
Yeah, absolutely. So that is the second part of, I guess, the narrative that's driving investors thinking. So markets, yeah, sure, they're getting primed and ready for a potential Trump win, taking heed of the polls and bookies, but investors are really positioned for tech company earnings victories too, especially from big tech companies who report this week. And this is why we're seeing buying continue to pick up and boosting shares in some of those companies who are reporting tonight, including Google parent Alphabet as well as AMD. So we'll get clues as to what is happening in the search engine space as well as chip makers. But later in the week, all eyes are on Google, Meta, Amazon, and Apple. And we did see their shares move higher overnight. So investors are, I guess, believing that we'll get better than expected company news. But all in all, the narrative has been positive. About 42% of the companies in the S&P 500 report earnings this week. But if we take heed of what we're seeing, the cycle suggests that a lot of investors and companies are actually okay with earnings only growing at 3.8% in the quarter. It's not a huge milestone, but it is better than expected and slightly better than expected. And that's why we're seeing equity markets support to the higher moves or support to the upside. But this week's bigger tech, sorry, I can't speak English today. This week's mega cap tech earnings and US jobs data, it could provide more fuel to boost near-term momentum. But I guess the question is, will the tech stars, Google, Meta, Amazon, deliver the goods and grow their earnings and outlooks, or will they fall? And if they do deliver sour grapes, that'll really upset the market and probably take the wind out of market sales.
All right, so that's a big watch this week. Jess, look, that positive momentum, the risk-on sentiment likely to follow through on the local market as well.
Yeah, absolutely. So just before we came onto the call, the futures were suggesting a positive day of trade. It'll be our second gain for the week if the futures is just suggesting a gain of 0.6%. So it'll be our second positive day of gains. We're still a far cry from our record all-time highs, though. Oil shares expected to face pressure after we've got tensions easing in the Middle East, which is why oil prices are down 5%. But a big focus, of course, will be on technology and technology shares. Anything and everything that's linked to Bitcoin is probably going to do well. So keep your eyes on the Square. They do make 40% of their money from Bitcoin and Bitcoin transactions. So that's one for Aussies to watch. Uranium stocks, also another big focus as well. We've got to remember tech companies, they're coming out with the goods. They're going into uranium in every way, shape, or form. We saw that with Google, we saw that with Amazon, and we'll probably see that narrative continue to play out when they report this week. So this is why you really need to keep uranium stocks on your radar. Yes, a lot of the small cap stocks, Paladin, Boss, etc., they've been moving. They have been volatile, but it is worthwhile keeping your eye on those, as well as the bigger ETF, a proxy of uranium, if you will, URA, that ETF. And last but not least, of course, today, lithium, and for the rest of the week will be a key focus, not only because of Tesla's blowout earnings, but of course, we've got BYD. They are the next EV giant to report earnings. Their earnings are out tomorrow, expected to show record EV sales. So that, I guess, is another lifeline for, I guess, putting the floor under the lithium price. Will the lithium price really bottom out and continue to move on up if we see momentum continue to the upside in EV sales? And also keeping a watchful eye on gold. We have seen big swings in Australia's biggest gold company, Newmont. They are now the 9th biggest company on the ASX. I do think that we'd be expecting some dip buying to really come into play here after they saw that huge step down lower on the back of disappointing earnings last week, Andrew.
Yeah, lots to watch locally. Of course, we're getting those quarterly updates, as well as Jess is also in the midst of AGM season too. Just taking a look at today, I guess the biggest is CSL, so that'll be a focus as well.
Yeah, CSL has really been, I guess, a knight in shining armor. A lot of people discount CSL because it doesn't pay a dividend, but I really think there has been, I guess, a lot of discounting because of that. But I do think the fact that they do have those two key divisions, and the Securus division is starting to see a strong momentum. That would be something to keep your eye on. Of course, we know the vaccine business took a real tumble when blood plasma collection centres were closed in COVID. So we're going to see a continuation of that recovery. That is a key driver of earnings. And of course, without immunoglobulin, if you can pronounce it better than me, that is the real key for I guess, making these concoctions and potions and lotions, which they are definitely not. Life-saving treatments is what they do, and that's the name of the game. And they'll probably, I guess, price to the upside when they report earnings.